everyone. Thank you for joining us today, and welcome to the 27th Annual H.C. Wainwright Global Investment Conference. Today, I have the pleasure of speaking with Dan Wagner, the CEO of Resolve AI. Dan, welcome.
Thank you very much, Scott. Nice to be here.
Dan, I appreciate you coming, and I think a good place to start, what might be helpful, if you provided a little bit of overview on Resolve AI and maybe where the company, contributes or helps the retail sector.
Thanks, Scott. I think it's helpful for everybody in the room to get a bit of perspective on why we are experts in AI, given that I don't typically, or I don't look like the typical, 23-year-old ex-Googler. I started my first company in 1984, probably before many of you were born. And it was the pioneer in online information. So we were the first to digitize newspapers, trade journals, and periodicals and make them available online for interrogation. And in order to do that back then, we had to develop our own search technologies, we had to develop our own commerce technologies, we had to develop our own data centers, because none of these things existed in 1984. And over the next 16 years, that business became the world leader in online information. It was listed on the London stock market in 94. 10 years after it started, and on a NASDAQ in 95. You will have used our content in CompuServe, AOL, Yahoo, Microsoft. I launched MSN with Bill Gates in 1995 when we launched Windows 95. We were providing all of that kind of consumer news and stock prices and stuff in those days. And if you were in investment banking, you will have used a product of ours called InvestText, which was brokerage research. If you asked your lawyers for a patent or a trademark search, that would have been us in the 90s and the late 80s. So just to give you a feel, that business was eventually sold to Thomson Reuters in 2000, which point we were operating in 192 countries. And the reason I point that out is because in order to deliver that service, we had to become pretty sophisticated in data management and in interrogation of content. And working for me was a guy called Dr. Martin Porter, who was the founder of the Porter stemming algorithm, which is the foundation. It's an algorithm that's the foundation of predictive typing, predictive text. And predictive text, and the foundation of it is the foundation of Gen AI, which is now we're predicting not just the end of this word that you're typing, but we're predicting the sentence and the paragraph and so on. And so after I sold that business, I set two other companies up. One, which was a company called Vendor, which was an e-commerce platform provider that ran e-commerce infrastructure for retailers around the world. It became European market leader. We ran most of the high street in Europe, and in the US, we ran Neiman Marcus, Lands' End, TJX companies, Under Armour, J.Crew, LL Bean, and many others. And that was sold to Oracle in 2014. It's now Oracle Commerce Cloud, their main cloud architecture. I also set up a search company called Attract, which provided enterprise search for companies and the search on e-commerce sites. And that company listed on the London stock market in 2014 and was sold to private equity in 2019. Now, the reason I give you all of that background is that my background is search, commerce, and SaaS. And as I came into setting up Resolve in 2016, I understood I wanted to set up a company that would address the problem of checkout attrition and cart abandonment in e-commerce. Knowing e-commerce as I do, there is a very big disparity between those people who buy online and those people who buy in physical retail. In physical retail, if you walk into a store, 7 out of 10 people end up buying a product. If you go onto a digital site, any digital site, 7 out of 10 people do not buy a product. So it's a 100% converse relationship between the two. And most e-commerce managers and marketing directors spend most of their time trying to figure out ways to improve the conversion of those 70% that do not end up buying on their sites. And the reason they spend so much time on it, it's obvious really, is that they spend a huge amount of money to get you to their website. When you get there, if 7 out of 10 people don't buy, that's a huge cost to the organization. If they can improve that by 10%, that's a 25% improvement in their revenue. So we recognized that, and that's what we wanted to do with Resolve, was address that problem. And we knew that Gen AI, this predictive, conversational, or certainly feels like it's conversational, but it's not really, but of engagement with computers is the way we can serve up a brilliant salesperson in the digital channel, a super salesman, for want of a better phrase. So we set out with resolve to deliver this extraordinary new way of engaging with digital channels, which we believe, I believe, that e-commerce as it is today is end of life. It's finished. This idea of navigating through a category list on the left or a little search box and ending up with 40 items on a page and flipping through another 40 items, another 40, is not a good experience. We're used to it, but it's not a good experience. And the best analogy I can give you is my wife. If I asked my wife to buy me a mobile phone, she could not do that online. Because she doesn't know what an OLED screen is. She doesn't know what iOS is or Android. She doesn't know what a megabyte is or a megapixel. So when she goes to the AT&T or the T-Mobile website and they present the phones with that data as the way in which to determine which phone to buy, she doesn't know what to do. But if she walked into the AT&T store on 34th Street and Lexington Avenue and said, I need to buy my husband a mobile phone, the salesperson there would be able to ask her a couple of questions. Does your husband use iOS? Does he use a PC or a Mac? Does he use his phone all day long? Does he need long battery life? Does he want a good camera? Well, does that matter? Does he want a high-end phone or a mid-market phone? A few questions, and he'd be able to present a few phones, and she'd probably end up being able to buy me a phone. So this is the issue, we believe, between digital and physical. The problem is you don't get answers to the questions that you need to answer in the purchase flow. So we created, I'm sorry, this is the longest answer. I never expected this.
No, I just hope the wife's
I'm trying to get you asked the question about resolve, and I think it was helpful to everybody to get a perspective. So what we wanted to do was we wanted to use Gen AI, to surface up this super salesperson that could ingest a product catalog from a retailer, but answer those questions in the way the salesperson would do. And that's what we're doing. We're creating a whole new way to engage in digital channels. It's extremely exciting, but we also knew that there was a problem with Gen AI, a problem that's being kept kind of quiet by everybody at the moment, but I can tell you it's a very serious problem, and it's called hallucinations or model drift. And AI has if you just think about it, it's obvious, right? Probability in terms of mathematics is guesswork, right? 70% likely this, 30% likely that, 20% likely this. That's the whole concept of probabilistic mathematics. Whereas binary mathematics, 2 apples plus 2 apples is 4 apples, is absolutely 100% accurate. So with Gen AI, it's probabilistic, it's guessing words and so on. And there is obviously an error factor. And the error factor we knew would be even worse with product catalogs. So in 2016, and the name Resolve is to address that problem, we set out to not only create this new way to engage with digital channels, but we also wanted to solve the problem of hallucinations right at the beginning. I don't even think people were thinking about it back in 2016. Certainly OpenAI and those guys were not thinking about it. They're trying to solve the problem kind of later, and I don't believe it's fit for purpose. So what we did was we tried to solve that problem. We created a number of patents and processes. I'm not going to get into the detail on it, but suffice to say, we believe we've solved the problem of hallucinations, solved the problem in the context of interrogating product catalogs. And that's why Microsoft and Google have partnered with us. That's why we're seeing such momentum in our market space, because we have something unique that we're offering the market. And we started selling this into the retail and consumer community at the beginning of this year. And we've already announced that we have over 70 million ARR by the half year, which is pretty good. I built many market leaders in my career, as I've mentioned before, but I have never seen such fantastic take-up, over 50 enterprise accounts in the first 6 months, and 70 million ARR revenue committed in the first 6 months from a standing start. We are really in the eye of the storm here with a fantastic product that's fit for the market, that solves a problem. Most AI technology solutions are designed to save, the cost of call center operators or something. It's always a cost-saving proposition, and our proposition is not that. Our proposition is an ROI, where if you deploy our technology from a 70% attrition on your e-commerce platform, we believe we can reduce that, and we're already seeing a 25% improvement in retention. So now it's 60% attrition rather than 70% attrition, and that's massive for the retailers and the customers we have. We're also seeing in our utilization of drive-thru, so customers like Dunkin' Donuts and Kentucky Fried Chicken are using Resolve to speed through the drive-thru in physical retail, and we're seeing a 5 minute improvement in pass-through rates. So, this is having a material impact. We're right at the very beginning of our journey. This is really the very beginning, and we are building a market leader, in my view. I'm not in this to build a mid-market player. I'm not in this, I'm really not. My time and attention on this and the 10 years nearly that I've spent getting this right for market is designed to build a global market leader. We're extremely ambitious. We're right at the very beginning of our journey. And that is the longest answer you'll ever hear from a fireside chat at this conference.
Oh, we appreciate the background, Dan. Now, you brought up Microsoft and Google. Can you give us a little more color on those go-to-market partnerships, how they came to be, and what they're contributing here in the first year?
Yes, of course. Well, first of all, I think it's worth saying that in order to become market leader, in my experience, you can't do it organically. You have to do it with three channels, in my view. The first is organic. Obviously, you need salespeople on the street signing customers. But the second one is you need to hook your wagon to the big players in the market who can give you access to customers, who can shoe you in to win big accounts. And so we've always had a view that opening up distribution channel partners is important. Now, before we went public, we had a partner in China, which was the state-owned enterprise China UnionPay, which is the largest payment and card issuer in the Chinese market. And that's what drove us to list on NASDAQ. But unfortunately, during the process of the listing, with the SEC weren't happy about an AI and payments business being partnered with the Chinese state. So we ended up, it was all in 2022 when everything was a bit kind of hairy there, or more hairy than it is now. Anyway, we segmented off our China because we basically exited China and ended up with no revenue. But the idea of working with, and we were doing about 100 million of revenue with them, the idea of working with partners is very key to our strategy. So back in 2024, Microsoft approached me and said, look, we're really interested in what you're doing and how you've structured this anti-hallucination issue and the products that you've created for retail. Can we come meet you? And after a courting of about 4 or 5 months, they offered, they suggested that they would sell our solutions into their customer stack. This went all the way up to Satya. This was all the way up to the CEO of Microsoft. So it was a very senior engagement with them. And I said, yeah, that's great. But they said that it has to be exclusive. You can't do business. I said, there's never going to happen. Never going to happen. I know these guys. They can make an exclusive deal with you and do nothing just to kill your market opportunity. Not that that was necessarily where they were coming from, but I've been around the block. I know how it works. So I said, no, that's never going to happen. They said, well, we can't do business. We had a very uncomfortable lunch with some senior people from Seattle. But at the end of the lunch, they said, look, well, we might consider, blah, blah. Anyway, we ended up signing a deal with them. Google were also in the game with us over the same period. They said the same thing. When we announced the deal with Microsoft, they rang me up all angry. A month later, we signed a deal with Google. So we have a very interesting dynamic there. Both companies see us as unique in the market. Both of them are selling it into their retail and consumer customers. Both of them are very competitive with each other. So there's a great dynamic there of who's going to sell more, and they know each other, so they know their counterparties. And so we're really quite enjoying this, because it's they're driving awareness, they're pushing us into their customers. It's a very good dynamic. I heard this morning that Claire Dane Barkley, who is the head of Microsoft for EMEA, has agreed to speak with me on a fireside chat at a conference in Portugal in November. That's kind of illustrative of the level at which we're working with these companies. They don't do that with any partner. They're really engaged with us. And the reason is that most AI solutions in the market are just like some tools, and you can go build something on it. So it's like, here's an LLM, and go and build a solution. And most retailers and companies, they don't know what they're building. They don't know what to build with it. It's like the early days of the dot-com, where people were selling solutions into retailers and brands, and they just didn't know what they were doing. They're spending a lot of money, and it would all end up being, rubbish. We've productized our solution that plugs in and solves a problem. It's a very clear market proposition, and both Google and Microsoft like that. So they're not taking any dollars out of our sale. They're encouraging their customers to buy it by saying it comes off the customer's commitment to Microsoft or Google. So most customers commit a 3-year minimum amount, and they're saying dollar for dollar we'll credit you against any purchase of Resolve. And they're saying to their salespeople, dollar for dollar. If you sell Resolve, it goes towards your quota. So we've got a fantastic dynamic of salespeople being encouraged to sell it, and it's a hot product, and the customers being encouraged to buy it because they've already got commitments. They don't need to get more approval to buy our solution, so it can be sold quickly. Hence our very fast take up and our revenue momentum. So that's the second channel, and the final channel on our growth is M&A. In order to be successful, we have to buy companies in markets. I'm not going to be opening anything in Spain anytime soon. I'm not going to be doing anything in Brazil anytime soon. We're focused on North America and continental Europe and the UK and some other markets. So acquisitions give us footprints in markets which we otherwise wouldn't get to for years. And we don't have years to plant our flag and make sure that we are, capturing the local market. So we're very, very ambitious. I think you can get that feeling, and we're very confident in our ability to execute because I've done this before. I know what buttons to push and what levers to pull.
Sure. Dan, on the organic side, there are some pretty impressive logos in your customer portfolio. How should we be thinking about growth, either within those existing customers, or is more growth going to be coming from new logos that you add here over the next 6, 12 months?
So over the next X years, 5 years to 10 years, we're going to be winning new customers. That's where the growth is going to come from. There is an infinite amount of business out there for us to win. We're in a $1.4 trillion market opportunity, and we want to be market leaders. So we'll be winning logos and customers, new customers, for the foreseeable future, for the next 10 years and probably beyond. Within the existing customers, we will also be upselling them and improving their monthly fees to us. The way it works, the way we sell is like a SaaS proposition, a software as a service, where we agree with the customer a 3-year, a monthly fee service engagement. And like all SaaS software sales, after 6 months or after a year, you have a review, how much you're using it. It's always an upward review, isn't it? I've never, ever been in business where it's a downward review. It's always, well, you're using so much, we need to increase your monthly fee. Or we sell them some new feature or new function, and that's kind of what we're doing already with the existing customers we signed earlier this year. We're going back to them and saying, well, there's some new capabilities we've got now, and encouraging them to increase their monthly retainer with us.
Great. And you mentioned M&A as being a important kind of leg of the stool. How should we think about, your M&A criteria? What are you looking for? What makes the most sense?
So that's a great question. So think of what we're doing as the Model T Ford, right? We've built a factory and a production line, and we're knocking these cars out. And the old way of doing things, which I would say is the traditional search that you are familiar with, search box and a navigation on e-commerce, that's end of life. That's the horse and cart. That's all over. And anyone who's providing search technology today, public companies like Bloomreach and Elasticsearch, private companies like Algolia, Lucidworks, and others who provide search technology to retailers, they're kind of like rabbits in the headlight. I mean, they know that AI is coming. They don't have hundreds of millions of dollars to invest in language models and all that sort of stuff that's required. They don't even if they had the skill set, they don't have the resources because they're running a business that has its own cash flow constraints and capital requirements. So this has kind of happened behind them, and it's overtaken them. So we come along and say, look, we've got the factory and the Model T Fords. You've got some customers and some people who understand the space. It's not quite the same now. The analogy is breaking down now between horse and cart and cars, but you get the idea. And we say, look, we'll take your organization. We'll give you some of our paper. Now your customers, we can upsell them the new way of doing things and increment their fees. And we get, I've always felt that acquiring companies that are synergistic adds a lot of value, because what happens is Bob goes and sees Martin, at the customer, and they've had a relationship for a few years, and they've had a pint in the pub if they're in England, or they've gone down the bar together and they've had lunch, whatever it is. They've developed a relationship, and the propensity for Bob to sell to Martin is very high. He has a good, positive, receptive prospect there. If we go in to try to sell to Martin, we're the new guy on the block. Martin doesn't know us. There's no relationship there. It's harder. So it's much faster and easier to absorb talent, sales talent and so on, that already have existing relationships and customers, and then to say, look, we've now got the Model T Ford, you can upsell that. So, and we did that already earlier this year. We bought a company in Canada, that was a search company called GroupBy, and the upsells there were so easy. I mean, it was, so it's clear to us that a roll-up strategy of buying old search businesses is a very clear route. But we have other things around the whole customer engagement journey that all make sense as potential roll-up technologies, so that we can provide end-to-end experience for our customers.
No, I think that makes a ton of sense. It sounds like M&A is going to continue to be a focus moving forward. I want to ask you about the professional services division you recently announced. What are you providing there to enterprise customers, and what are they finding helpful?
So think of what we're doing now as not dissimilar to what happened when e-commerce was introduced. Retailers in the old days, I say in the old days, in the early 90s, would put a sweater on a shelf, and then they put a little tag underneath to say how much it was. And the consumer would come in and look at the sweater and feel it and hold it up, and then they'd buy it, right? Then they went to e-commerce, and they need to take lots of pictures of that sweater, and they need to write a description of that sweater, because in the e-commerce environment, there wasn't the ability to pick it up and feel it and look at it. So there was a skill set that needed to be developed by the retailer to enhance product catalogs such that they had more data around them. But what's happening now with our solution is that we need more data as well, because if the sales, I'll give you an example. If I was engaging with a digital version of a salesman, and I said, I'm thinking of buying a camera, and the answer was, well, what sort of camera would you like? What sort of photography are you into? And I'd say I'm interested in landscape photography. The knowledgeable salesman would say, well, this camera is good because it's got a good depth of field, because that digital salesman understands how to take landscape pictures, understands the concept of landscape photography, doesn't just understand the camera's specifications. So in order for the catalog to really be valuable in a digital environment, we have to train our model on how to take landscape photography books, how to take sports photography, how to take fashion photography, how to take whatever. We ingest those for that salesman, so that when somebody says, I'm interested in taking sports photography, say, well, this is the better camera because it's got a faster shutter speed. Those kind of things make that sale much better. And it's when you walk into a physical retail store and you have a salesman who's very knowledgeable, not just about the products, but the utilization of those products, is when you buy those products, right? That's how it works. So we are training our model to have those same qualities. Long story short, we need to provide those capabilities, or the retailer needs to provide that additional data. And when they don't, they say, can you do it? And that's what's happened in the last 6 months. We had a lot of demand come back to us. Can you enhance our product catalog?
Sure.
And we're saying, sure, we can do that, and we're allocating resources. What will happen is, over the next few years, the retailer will take that capability in-house. They'll step up their ability to enhance their product catalog, recognizing what they need to do. Then our business will start to fall away. So it's a lower margin business than the tech, which is 85% gross margin. It's going to be 25 to 30% gross margin, but it's not a long-term part of our proposition.
Great. And now we're running short on time, so I want to get one more in, and this may get me into a little bit of trouble, but what do you think is an underappreciated part of the story that either the sell side or the investment community isn't fully appreciating about Resolve?
Well, on the one hand, I'm very happy that our stock price is relatively low against our peers, because I think that's a good opportunity for investors to join us on the journey. And the fact that we're not well known by Wall Street really yet is also actually quite a good thing. So I don't really have a problem with that. We're capitalized, we've got cash, we're doing our thing, and the story will permeate in the market, and I think the stock will be materially re-rated. We heard last week, or earlier this week, that a company on the West Coast called 𝗖𝗓 AI, which does something slightly not in a similar field in call center, does not own its own technology, does not have the problem that addresses the issues that we've addressed, has raised $350 million at a $10 billion valuation, and is expecting to do 100 million ARR this year, which is we're expecting to do. So if we're a 10x discount to that, we're in a good space. So I'm kind of fine with where we sit in the context of our peers, and I believe that our results, which we announce for the first half year in the 1st of October, and we'll give visibility on the second half, and next year will re-rate the stock, and I think the stock will be re-rated as the market starts to get more aware of us. I think the other point to make is, of course, that we de-SPAC'd, and horrific journey. I never recommend to anybody. Went through this horrible SPAC process. I'll never do it again. Sorry if you're promoting any of these things, but it was horrific for me. We got out of that in August of 2024, and there's a 1 year kind of weird. We're not quite a US listed companies. Well, there's some constraints. That all finished in August of this year. So now we feel like we're a US listed public company. We've got all that behind us. We've got no horrible hangovers. And now we're starting to see larger institutions, more recognized institutions who are willing to meet with us, whereas previously they weren't. And I think that that's going to start to open up awareness of our proposition.
Great. Well, Dan, thank you very much for joining us today. I appreciate your time.
Thank you.
And
thank you, everybody.
Anybody with additional questions, please feel free to reach out to me, sbuck@hcwco.com. Thank you.
Thank you.